Good morning, everyone. Sam here. Let's get started. Good to be with you. So, first off, having a little challenge here with the technology. The taskbar is stuck there, so we're going to go with a little bit different view today. We'll cover all the information and everything, but I'm not able to display the way that I want to. So, might look a little bit smaller on your screen. Sam here. Let's get started. Good to be with you. All right, sorry about that. There we go. So, maybe a little bit smaller on your screen, but we'll go over all the information anyway. No worries. And yes, when you invest properly, you're buying a day you don't have to work. Now, many of us, I saw the one comment in the chat, many people love what they do, and that's fantastic. That line really should read, when you invest properly, you're buying a day that you can basically do whatever you want to do, right? Whether it's working, playing, you name it. Absolutely. All right. So let's move forward. We're going to cover 2 or 3 things today. We're going to cover this whole news and price concept. It's a relationship that works so well, yet most people don't understand. Okay. We will also go do our stock portfolio that we've been sharing, delivering, working on for many months now. We'll update that. Anyone in our group here in some of those stocks from our model portfolio? And we'll go over those in a little bit. We just have some updates. Just want to make sure, it's. I felt like the really responsible thing to do is to keep sharing that and keep going over updates and all that. Don't want to just leave people in positions with unsure of where key levels are and all that. So we'll go over that, and then we'll dive into the markets. So lots to cover. All right. So real quick, we went over this yesterday. Okay, I see some of you in those positions. So we'll definitely look at those in just a bit. If you have any questions or anything, just go for it when we bring those up. Okay. So we went over this yesterday, and remember the whole concept, and you can watch the recording if you didn't. So I wanted to use one of our levels that Jasmine gave you yesterday as an example for what we're doing here. Okay, so what we went over yesterday, the whole concept of unfilled orders, filled orders, how to deal with the middle, how to deal with the supply, the demand, entries, stops, targets, things like that. We went over a lot of that stuff yesterday. So once Jasmine took over yesterday, she went over the S&P, and she went over this opportunity here. This is from yesterday's session, and this was a supply zone that she found in the S&P up here. A little bit later in the morning, price rallied up to that level right here, came back, revisited here, and then fell very quickly. Anybody take this position, by the way, and care to share what you may have done with it? So relating this to what we talked about yesterday, okay, look at the supply zone, right, which represents unfilled sell orders. Now, how can we say that? This area represents unfilled sell orders, significant supply, whatever you want to call it. Well, if supply and demand were equal in this area, and let's look over here when Jasmine gave it to you. If supply and demand were equal or in relative balance here, price would just keep trading sideways, wouldn't it? Does everybody understand that? That if there was an equal amount of supply and demand here, price would just keep trading sideways, right? It couldn't. In fact, it stayed here for a short period of time and fell away. Okay, so All right, well done there. Well done. We'll talk more about this in a minute. But so understand that concept. Now, once price moved away from that level, look at what happened down here. And let's move over on the chart on the right. It's the same setup, but just showing you the setup and then the result. So again, like we talked about yesterday, what does this area in the middle here represent in the gray space here or the white space? What does this represent? Filled orders or unfilled orders, right? Remember we talked about this yesterday, right? Filled orders. How can we say that with clarity? Because look at all of the trading activity that took place here. Okay, the reason why so much trading activity takes place here is because you don't have a significant supply and demand imbalance in that area. If there was a significant pocket of supply or demand in here, the picture would not look like this. It would look very different. In fact, it would look like that, right? It would look like the supply zone or the opposite being demand. So unfilled orders or supply, right, causes price to turn. Filled orders, the picture we've been working on this week, or a lack of supply and demand, allows for prices to move fast, or allows for prices to move, period. But does everyone understand why price drops so fast from this level? Does everybody understand that? Now, we can dive into news and everything else, but there's always news, right? The real reason is, if we keep it, again, you need to keep all this very objective and rule-based, and not many rules and not complicated rules. Very few rules, very simple rules. Price fell so quickly because there wasn't significant demand to stop it. And, and what told us that in advance? All of this trading activity here. Okay, this activity, right, fills any significant pockets of orders in this area, so price can move quickly through it. Exactly. So I know I'm kind of just repeating myself, but I just wanted to take yesterday's concept, apply it to a trade opportunity that Jasmine shared with you, and just explain kind of how all that works out. Now, I saw some of you took the trade. Well done. That entry would have been right here, which means you would have had to sit through that, which is fine. That happens once in a while, and then price fell. So I imagine that if you did take this trade, looks like some of you said you did, and it worked out for you, that means you probably set and forget your trade. Who set and forget? Who set that trade up, entry, stop, target, and just left it alone? Because again, that's one of the things that we that we want to focus on also. More on that another time. All right, so let's keep going. Now, let's talk about news and price. Okay, news and price. Some thoughts on thinking around this. As with everything, before we dive into the mechanics and rules of, how many candles here and what to do there, like the details, it's far more important that you understand how to think this stuff properly. That's the key, right? I notice a lot of people tend to overthink things, and a lot of people want to go right to, okay, well, how many candles here, and what about a leg out or leg in there, and they get right down to the specifics, like we're building a house and we're looking at a blueprint, right? Okay. Before that, you have to make sure you have the proper mindset, and that's what a lot of people miss. So some thoughts on thinking here: news and price. Now, why did I make news red and price green? Why do you think we did that? Why is news in red and price in green? Right. Well, right, we want to focus on one to make our decisions and let everybody else focus on the other to make their decisions. If you focus on news to make your decisions, you're probably not going to like the outcome. If you focus on price to make your decisions, you have a much better chance of being successful. Does that make sense? Okay. So we want to focus on, when it comes to news and price, we're talking big picture. We want to focus on fresh, larger time frame supply and demand levels for the markets that are impacted by the news. Okay. As we talked about yesterday, and we'll continue to talk about this, all comes down to location and structure. Those are key. And as I've always said, and you could put whatever words you want in here, it's so important to trade what is real, not what you feel. Invest in what's real, not what you feel. At the end of the day, the proper line is focus on what's real, not what you feel. Okay. And then, of course, anything around big news events and trading, investing opportunities, whatever, always make sure that you really understand your risk and that you're okay with that. That's the most important thing. All right, let's keep going. So I want to take you back, and we're going to spend a little bit of time here, to some opportunities from the past to show you how this relationship works and really help you understand how markets really work, exactly why prices turn and move in markets. It's not that complicated. We're going to talk about it here, but it's important that you understand. So there's the news impact of price, and then there's the trading or investing opportunity related to that. Now, if you go all the way back to March 2009, anybody with me back then in some sessions or things like that back then? Let's see who's with us here today. Anyway, back then it felt like the world was coming to an end, especially March 2009. That's when we had foreclosures at all-time highs. AIG was ending, right? Life as we knew it was going to end. Just unbelievably bad news, right? Unbelievably bad news. That forces price, and we looked at the monthly chart back then. All right. Okay. Yeah. Some of you were with me back then. Okay. Yep. Scott, I remember. Okay. I wonder, is Dennis with us here today? Anyway, so price had come down to a monthly demand zone that we saw on the monthly chart. Notice it was below this pivot low, and we're going to go over a few big ones here in a minute. Okay, down to a fresh area. So structure, location, we had it. Monthly chart. It was unbelievable that price came down to that level. But anyway, that ended up being the low, obviously, and we've done nothing but go up ever since. But you have to understand, was this news real? Was it fake? Was it serious? All that stuff. Absolutely, it was real. No one is suggesting it's not real. But I want to hopefully enlighten you on something, if you don't know this already, that can really help. Someone, I've had this question before, like, what is it going to take for the markets to go up? And during bad times, right? During rough times in the market, some people say, well, what's it going to take for the markets to go higher, to turn and go higher? My answer usually is, well, everybody needs to sell. Once everybody sells, that's the turn. And the average person hears that and they scratch their head. They're like, huh? That doesn't make any sense. If everybody sells, the market's going to go down. No. You need to understand how markets work. Okay. Here it is. The worse the news is, and we're going to relate this to COVID and what's going on now in the markets. And some of you have been through this, with me over the past few months here. But when bad news comes in around the world, and let's assume it's really bad news, what does that do? That gets people to focus on that bad news and decide to sell. They sell out of fear. They sell because as they're growing up, they're taught that that's what they're supposed to do. Buy when things are good, sell when things are bad, but they sell. And think about it. The worse the news is, the more people around the world are going to sell. Now, how does that relate to market price? Well, with more and more supply coming into the market, that supply is simply looking for buy orders on the other side. Well, if there's a ton of supply coming into the market, you're not going to have enough demand at current prices, so that forces price down until it can find a price level where there's enough demand to meet all that supply. Does that make sense? And now, what Jasmine and I have focused on forever with you is not just to identify any old supply demand zones. We try to identify the supply and demand zones that are significant, where banks and institutions are buying and selling, right? So in this case, like all the others, and we're going to look in a few minutes at more, this drove prices down to the first fresh demand zone on the monthly chart. Okay. Now, once the last seller sells based on that news that is very real and very bad and very scary, once that last seller sells, what's the next move in price? What happens to price next? It goes up, right? Up to where? Up to where supply is. But think about it. The majority of market participants just sold. So that supply zone is that opposing supply level is going to be significantly higher. It's not like it's not like the Wizard of Oz where there's a man, a wizard behind the curtain deciding where markets are going to open and where prices are going to go and all this stuff. Not like Goldman Sachs has as much control as everybody thinks they do or all that. It's simply supply and demand. It's a numbers game. Okay? Exactly. All right. So here was the worse the news, that brings price down to key fresh demand zones, larger time frames, the better the trading or investing opportunity. Now, I know what you're thinking, how many people are going to be comfortable buying down there, right? Well, emotionally, obviously, to the average person, this is the hardest time to push the buy button. But if you think like a professional, right, it equally is the most ideal and exciting time to buy into a market. So what does a professional know that the average person doesn't? How does the professional think that's different from the average person? The professional, and when I was on the trading floor, one of the things I was excited about in the beginning was like, ooh, I'm going to learn the big Wall Street secret. How does the professional make so much money and everybody else doesn't, right? I couldn't wait to learn that. Well, once I figured out what it was like I was like, okay, that's not any earth-shattering news, but wow, is that simple and real? What the professional knows, like this example and all the other examples we're going to look at in a minute, is that how you make money buying and selling anything in life is exactly how you make money buying and selling in the markets. Okay? The more that you can focus on buying at deep discount wholesale prices, demand, and sell at, expensive retail prices, supply, the better you're going to do. Some companies out there are very good at that. The ones that aren't lose out to the ones who are. In the trading and investing world, again, it's the same thing, right? Think about it. No matter how old you are, I'm sure we have people that are in their 20s in our session here today. I'm sure we have people that are in their 60s and 70s and maybe even 80s, okay? No matter how long you've been alive, one thing has remained the same. The Wall Street professional makes a lot of money in the markets and everybody else doesn't. There's a reason why, and we're getting into it here. Let's keep going. Okay, Warren Buffett, right? He understands the secret. He was a big, he was very bullish down there that same time. So that's March 2009. If you look right out of Berkshire Hathaway's annual report, they took in $7.7 billion on premiums, right? Meaning they sold $7.7 billion in put premium. Another way to say that, he sold insurance on portfolios, right? Sold 15 to 20-year put options on the S&P 500. What that means is, if you don't understand options, is that right down here at this level, right, that I just showed you, the demand zone, there was someone on the other side of that transaction. Someone who said down here, wait a second, I'm terrified. I need to buy puts on the S&P 500 to the tune of $7.7 billion. Okay. Well, we see how that worked out. But think about that mindset. And that was not some average person. I mean, maybe it was a collection of, novice investors, retail investors around the world. But just because we say Wall Street professional, not every Wall Street firm, does that well. A lot of hedge funds go out of business. There's plenty that are good, but So make sure, what we're really talking about here is the smart mindset, the smart money mindset. But buying puts down here, that's like you just bought a brand new beautiful Ferrari. You were so excited when you bought it. You said, you know what? I'm gonna call my insurance agent tomorrow. I just want to drive this thing right now. I'm not going to get in an accident today. You drive off the lot, you go around a corner full speed, and you smash into a tree. You're okay, but the car is totaled. You just totaled a $500,000 Ferrari. You climb out of the car, you get on your cell phone, you call your insurance agent and say, hey, I just crashed into a tree. I want to buy car insurance. Probably not going to work out well, okay? That's the wrong mindset down here. Believe me, that insurance agent would love to sell you that insurance right there because it's not going to be cheap. All right, let's keep going. This is now 2011. Again, if you could think of any big news event in history, this is what happens. It's the same thing every time. And whether you play it right or not depends on whether you're focused on what's real or whether you focus on what you feel. So here's the Barron's, which is part of the Wall Street Journal, I interviewed me when this is the what happened in Japan, the big nuclear reactor, right? Big disaster, very real news, awful news, terrible news. Nobody wants any of this stuff to happen. It's awful, right? We know that. The focus here is how we make money buying and selling in markets. Right? Hopefully no one thinks for a second that, anyone's, wants this news to happen. Of course we don't. None of us do. It's awful. So look at the title of the article. Steer clear of radioactive Japan stock play. So I'm on the phone with this guy. He's asking me these questions. Is that a bullish or bearish title to the article? Obviously, it's very bearish, and all the questions were directed that way. He's saying, Sam, obviously the markets are going to fall, and is this going to go on? How long is this going to go on? And obviously, there's much more selling. I mean, look at the title of the article. I mean, he had his bias already in, no matter what I was going to say. But I'm looking at the daily chart of the S&P when he's asking me these questions for the article, and I'm thinking to myself, ooh, how do I even say this, right? This is an awful event. People are losing their lives. It's terrible. Yet this is when you should be buying into the market. Okay. So I just commented down there that, typically markets collapse into high quality demand zones that turn out to be incredible buying opportunities. That's how markets work. Look, you and I didn't, come up with the rules around markets. So, but this is how they work, right? Nobody wants this bad stuff to happen. Anyway, the news impact was very strong on the downside, on the negative side, which means it's equally strong for the trading or investing opportunity side. We wrap our supply and demand rules around it, execute like a robot. Now you're thinking like a professional and executing like a professional. That's the goal. All right. Market ended up rallying quite a bit from there. Let's move on. Okay. So one of the things I was talking about back in early March, right, mid-March, was, this is when the COVID stuff started to pick up. And maybe I think some of you were probably in the sessions with me back then. And this is, we went over this type of information. Okay. So the most important, so what I did was I went and looked up, what was the impact of epidemics and pandemics and stuff in the past. So the overall theme here was, while the short-term impact was bearish for the markets, most of the time, very quickly, prices turned and screamed in the other directions. Now, I've been involved with the markets for many years, since my early 20s, and so I've lived through a lot of this stuff. My experience is crystal clear on how the markets really work. Just trying to share all that with you here. But the message back then in early to mid-March was, look, COVID is different, and it's worse than a lot of things people have been through, but the stock market decline is likely to be short-lived. So we scrambled and went and found some demand zones based on everything that we've talked about yesterday and today in these sessions, right? With structure and location. We went into automatic mode of larger time frames, and then we just, executed our strategy, right? So let's go through some of these. And what I want to share here is a combination of two things. First of all, we're going to update, go through a quick update here. And I know we want to get to Jasmine in the live markets, and we've got a good plan for you there. But when it comes to this model stock portfolio that we've been kind of running, behind the scenes, in front of the scenes for a while, we want to focus on a different way to invest. And if you think about it, one thing I learned on the trading floor early on, and it's really what hooked me into this whole industry and business, the trading business, okay, is one thing was very clear: handling the orders and really seeing supply and demand firsthand, like, literally at my fingertips and in my fingertips, because back then it was paper orders. I saw something going on that jumped out at me. I said, wow, banks and financial institutions are right in their decision-making process most of the time. And as a whole, they tend to make a ton of money. And in my young 20s, I've never even thought of that much money, right? It was like incredible. So at the same side, I'm also handling orders from, retail traders and investors and all that. And I saw that group tended to be wrong in their decision-making process most of the time, and as a whole, either lost money trading or never came close to achieving their financial goals as an investor. And what really hit me and hooked me into this business is, wow, this group does so well, this other group does so poorly, yet they're both buying and selling in the same market. What is one group doing that, what's going on here? What is one group doing that the other group isn't? Does that make sense? And when I had that epiphany, I didn't really have the answer at that moment, but it was like, okay, I know what I'm going to do with my life. I want to get involved in this trading thing. I want to figure out what this group is doing here. And the good news is I work for a big financial institution right now, so I could figure this out. And I've got all the orders right here. And sure enough, and you see very quickly, right? One group focuses on what's real. The other group focuses on what they feel, right? One group understands that how you make money buying and selling anything in life is exactly how you make money buying and selling in the financial markets. The other group does it the opposite. So a different way of investing is, you think about the average investor. When do they put money in the market? I mean, we can go on and on for over this for forever, but just look at the 401k program. When does someone's hard-earned money go into the market? Let's just the 401k. I mean, we could talk about this all day, but just 401ks. When does that money go into the market, right? People work all day, all week. Some people have jobs they don't even like, and you follow me? And a portion of that money goes into the market because they're trying to do the smart thing, the right thing, and invest in their future, which is a great thing to do. But when does that money go into the market? Yeah, every 2 weeks, right? The 1st and 15th typically of every month, right around then. Does that make any sense? That you work so hard, you're away from your family so much of your life to work so hard and to invest this money you're making based on a date? Okay. Now think about the average person that does that. Okay. I'm sure that a lot of people that do that are also the same people that when they go to the grocery store, they have a grocery list and maybe they cut out some coupons to save a little money to try to buy things at a cheaper price and all that. When the average person, I'm talking like all of us too, we go buy a car. What do? We shop around. We find the car that we want. Now we try to get it at the best price. Does that follow? Everybody follow me there? Yet that same person is the same person that dedicates part of their paycheck every 2 weeks. They buy into their future, which is investing, right? They buy into their future based on a date. Why? because they don't understand how markets really work. And I also think, I understood that from an early age too. It's like, wow, most of the world thinks this backwards. Okay. And anyway, a new way to invest is understanding your risk, understanding your potential reward, understanding how all of this fits into an overall plan that's designed to help you reach your ultimate financial goals in order to meet your life goals, right? That's what that's all about. But it's also about the biggest thing that's not even on the screen here. It's about thinking you're investing, right? When to get into a position, when to get out, the same way you do when you buy and sell anything else in life. Okay. All right, let's move forward here. And if you don't think timing the markets and focusing on price as a long-term investor, obviously it is as a short-term trader, but as a long-term investor, if you don't think that's important, take a look at the screen here. Each blue bar that you see here represents 10 years. Okay. Depending on when you invest into the market, invest into stocks, all that, and again, obviously trading, but investing too, it can be life-changing, right? We all know as we get older, life is not as long as you think it is, right? So we have to make wise decisions. All right, let's keep going. So let's do a quick update here. And so here first we're going to go over the open and close positions, and we'll look at a couple of those, and then we'll take a look at the pending list, and we're going to add to the pending list. This was actually updated much earlier this morning. So here's the date that these positions were put out there on the modern portfolio. These when they were added. Okay, so again, this is the model portfolio that we've been going over for a while now. Here's the symbol, the company, the dividend. We've got some dividend champs in here. Not all of them, but some of them. The sector, the entry. Here's the demand zone that we focused on. And then your protective stop or risk is just beyond, just below the distal line of the demand zone, just following the rules that we lay out. And then of course we've got have target prices for everything. Okay. The circles here, I wanted to point something out. A lot of these were, added the 23rd of March. That's when we started going over this because the markets were falling. We wanted to find those big demand zones. We'll look at those in a moment. But if you missed the entries on those days, right at the turn there, okay. So we got some of them, but if you missed those, the markets then went up a little bit, created new demand zones, and the circled areas represent some of those. Okay, like Cisco and Disney. Disney's one we're going to look at in detail in a minute, but that one didn't hit our deep discount demand zone, but instead it developed a new demand zone a little bit later, and we were able to add that to the portfolio here. Whoops, let me just get rid of that. Okay. So my point with that is, if you didn't get in the March lows, it doesn't mean you can't get in again, right? That's my point. There are other demand zones with significant profit zones that we can focus on. Okay. Oop, getting all these little pop-ups here. All right. So far, the Carlyle Group, which is an oil company, Microsoft, the Spiders, and recently MasterCard all met their profit targets for some nice gains there. CMCSA, if you remember, that was on our pending list. This is now on that med entry, so it's now on our open list. Some people may have been in PFG. Okay, Principal Financial, which is pays a really nice dividend. Depending on where you put your stop there. So this didn't trigger our stop buffer. I believe it went 30 cents beyond our level. So it depends on where you it depends on where you put your stop on that one. Okay. Let me see if I can make this a little bigger for you. I don't know if that'll help. Let's see. All right. And then the rest of these are open positions. So let's take a look at, let's move forward and go through more. Yeah, I want it. Yeah. So here's full screen mode. The problem is I can't, I probably should have asked at the beginning of the session. I cannot figure out how to get rid of this taskbar today. So, and it cuts off the bottom of the screen, but there you go. Is that better? That should be better. Okay. Yeah, I noticed some people are still in PFG. Some people got stopped out of PFG. It just went a touch below the demand zone. So, but it didn't trigger our stop buffer. But again, look, if 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 a position gets stopped out, if you're taking a number of positions that meet the criteria you're looking for, and now you're starting to add some risk management to investing, that's a great thing. So if you get out, if you get stopped out of some kind of investment, some kind of bigger picture position trade, and you stick to your rules, that's okay. Remember, you're adding risk management to your investing, your long-term positions. And I don't mean you, I just mean in general. Imagine if people did that. All right, let's keep going. Okay. So this pending list, we're actually updating this. So we're going to add a bunch more to this. A number of these are getting pretty far from their demand zones. So we've got some updates coming. We'll go over that. LUV, Southwest was another stop out. And but this one ended up turning quite a bit higher. Okay. So again, back to the open list. So we've got a number of them that have achieved their targets. These are all open positions and have some really nice gains going. And then we've got our pending list. And then Southwest Airlines was a loss for us. Okay, on the stop out column. Okay. All right. Let's look at Disney. Anybody in our group here in Disney? Yeah, and again, we're going to keep going, and there's new demand zones to look at. There's new profit zones that develop. So it doesn't just mean because the market's moved higher, there's no place to get in. Absolutely, but the demand zones are lower, so we need to wait for that. Okay, it's like the new TV that we want, that we absolutely have to have, is $6,000. We are only willing to buy it at $4,000 or $3,500 until it goes on sale. We're just going to sit tight. Okay. All right. Well done on that. Well done on that, Chris. Okay. Yeah, that's the other thing with the LUV. Some people, if you widen the stop a little bit, taking a bigger time frame, you're probably still in and liking that. But okay. Well done, Jade. So let's look at Disney, just kind of again to re-emphasize the concept. So here was our demand zone, and price came down a couple times to the demand zone. So that met entry. That's an open position, and it actually almost hit our target yesterday or the day before. But I wanted to, again, bring the news price relationship into this. So May 6th, just a week or so ago, this news comes out. Wall Street Journal says, wow, health crisis slams Disney, but more bloodletting ahead. And what else can we add to that news? By the way, the Disney parks have been closed for months now, and they're still closed. Okay? Right? Now, Disney is not just a theme park. Disney owns a lot of different things. Stocks like Disney are almost like ETFs in and of themselves, right? So on that news, the day of that news, Disney does get slammed down, but look at it, stops dead right at the demand zone we had. Okay? And then price takes off higher. All right. No matter how bad the news is, what matters is when it comes to price, all that matters is supply and demand. Okay. Bad news is going to drive price down to price levels where demand exceeds supply. Once the last seller sells, their price is going to scream higher because you now have an equation where you have significant demand, no more sellers, and even above that price, everybody already sold there. So the supply is going to be much higher. So we're getting pretty close to that 120, I forgot what it was. It's, let me just look real quick. Disney, 121.5 is the target there. Okay. IWM also, that's the ETF for the Russell. That's the small cap stocks. That's also an open position, getting close to our target, sitting just above 140. Just a little quick update there. And then Qs. I don't know that the Qs may have hit that target. I'm not sure, but so we had a 230 target on the Qs. If you saw on the open list, open position list, but the Qs are getting close. And let's keep going. And I know it's getting late, but hopefully this is helpful. Jasmine has some great stuff to go over with you in just a minute. We'll get to that. All right, real quick, I want to take a look at this and not spend too much time here, but I just want to, again, just reaffirm the concept. So this was our demand zone in the NASDAQ when we were going over this in March, okay? Big picture, big time frame. I believe this is a weekly chart that we were looking at, okay? Notice as price was falling, you had all these pivot lows right here. See all these pivot lows? Okay. Okay. All these pivot lows here, these are not demand. I feel like I've been screaming that forever, but people say, why is that not a demand zone? Those are never demand. Okay. The fresh demand zone was down here. And that was our first demand zone here, the 65.77 to 68.17. And anybody still sitting in this NASDAQ position, maybe in the futures or the Qs, if you're in from back then? I know we've been going over this for a while. Okay. Yeah, and Peter, you can, that part, we go over that, but that part is up to you. And, do you want to just buy the market outright? Do you want to do an options position, right? Possibly buy calls, though they would have been expensive, or do some kind of spread or and then is it the futures? Is it the Qs, right? And we, again, we cover that. All right. Well done. Well done. How you doing, Larry? Good to see you. Good to see you. Okay. All right, let's keep going. Now, please pay attention here. This is a very important point, with what we've been talking about the last 2 days. Notice we had the same thing in the S&P, and we went over this. We had a demand zone, 2143 to 2179, and price came right down into our level. But why did we pick this area? Because we had to go, and I know some of you have heard me say this, like 20 times already, but we had to go below the December lows if we wanted to find fresh demand that was in the most ideal location. Without thinking and following rules, we had to go below the December lows for the S&P, for the Dow, for the Russell. All right. And when you did that, the first area that met our criteria was down here. And I know this doesn't look like a perfect demand zone, but if you go down to a little bit smaller time frame, you'll see it's in there. Okay. And the lesson with all this is, again, significant events bring price down to up or down to significant supply and demand levels, right? We can reverse this too. Okay. And I can show you some examples where good news brings price right up to key supply zones. Doesn't mean the news isn't real. It very much is. So again, there's the news impact, and then there's the market price impact. It's a relationship that works so perfect and is so simple, yet most people get it very wrong. Okay? All right. Let's get into our market focus for today, and then I'll turn it over to Jasmine. She's got some great stuff to go over with you. And one of the probably one of the most important things to talk about today, we've, early, I believe it was Monday, I think, we went over the supply zone in the Nikkei. This is looking at the daily chart. Just to be aware that in some of the major markets around the world, we do have supply zone, supply above current price, where it looks like the NASDAQ is ready to make a new all-time high any day. There's even supply in the NASDAQ, right? And then when you come down to weaker markets like S&P and Dow, and then weaker markets than that, like the Russell, and then weaker markets than that, like the Nikkei and DAX, prices, we do have supply zones above. So I wanted to make sure you saw now that we're coming up to that level. When we look at a 60-minute chart of the S&P, where prices generally are here, we see that, prices within this range. The key here is, as I put in the current market focus, equity index quality supply is still a little bit higher. And you can see that on the chart here, right on the screen. Okay, so buying and selling opportunities inside this range, or too far before the supply, or too close to the middle, are not ideal. So be careful, right? Want to be careful with that. When we look at the 4-hour chart, which is an even a bigger picture, called almost X-ray of this one market, this one supply-demand relationship, we see that the very significant levels are quite a bit higher, right? And but again, we've got these 60-minute areas to deal with. We're not there yet. So when price is right here, it's a tricky time for a lot of people. Some of you may be a little, confused. What do I do right now? A lot of times, again, we know because market prices are most of the time somewhere in the middle, right? A lot of the action you take as a market speculator is no action, right? You need to wait. Look, there's a reason why most people fail at this and very few do well. Okay, and there's a number of reasons, but one of them is we're humans. We always want to be doing something. The key is to wait until prices at least get close to that supply or demand outside of that middle white space. That's where our key levels are. That's why some levels work and others don't. It's always that combination of structure and location. Make sense? And then, of course, so what Jasmine would do, which is what we all should do, is, okay, if the equity index markets aren't crystal clear at current prices, meaning, they're clear, right? We know the supply levels are higher, but where else can we look for some secondary information as to where not just the equity index markets are going to go, but the some of the major markets around the world, right? Well, one of the markets we can look at is bonds. Today, right now, they're in the middle of a range, so they're not offering us any help. If they were getting pretty close to a key demand zone, that's a different story, right? But she'll go over all that with you. Just wanted to share this, and hopefully all that was helpful. I'm going to turn it over to Jasmine right now, and I'll see you tomorrow. And of course, you can always reach out if you have any questions.
All right. Hi, everyone. Great stuff. Thanks, Sam. And hopefully you all can hear me today. Okay, my chart should be coming up. All right. Okay, so let's take a look at what we got coming into today. So like Sam said, with a couple of those inverses not offering us a lot of help, since yesterday we had that, initially when we came up into this supply level. Where did all my data go? All right, so you can see here, initially when we were starting to move up into it, and some of you, you can see it's not particularly, the times in is not really the same as it's hitting a demand zone, comes back in, hits another, but really it's all within the same day if you take a look at it. So that's why you can see prices go deeper, but then still was able to hold through for most of it. Now you can see, yes, this is another day, and this is another time deeper into the overall area. But we did have that news about the vaccine, which kind of not as sure as what they used to be. But you can see overnight, we did come into a couple of lower time frame demand zones. The general area held for most of the markets in those in the lower time frame zones. But now today, so this is what I'm looking at for overnight. Overnight, we had when I looked at things. So if we look at this market and we look at the DAX, and you can see, so a couple of things with the DAX too as well. This market has been a little bit weaker in general just because of what's going on in Europe and how they were affected by the virus and all. But now they have their stimulus package, and on top of thinking things are going to go be normal again with another vaccine that's also on the horizon. So things are starting to look up, and what I'm seeing, particularly with what has gone on just in the overnight trading, it was very, very reactive to this market. I only say that because when I was trying to do different things with the NASDAQ, I noticed that the minute that the DAX moved. Now, this isn't always the case, but because, like I said, a couple of factors came into it, it does look like. So I would pay attention to this market. It's going to close in after a few hours in the morning, but it did look like to me for this morning that it was very reactive to this market. So just watch out for it. It still has room to its daily, which is still up higher. So definitely look out for this market coming into today. A little bit lower down, it has demand. You could see a little closer one that's coming in at the 10.763 to 10.722, and this is the German market that starts overnight at 2:00 a.m. Eastern Standard Time. So when we take a look at this now, we do have a gap down below. Which is coming in at 28.4550 to 28.32. And we are still a little bit a ways from our upper level on the 60. Right. So we're still a little bit a ways from our upper level on the 60. So it's kind of telling me today, not as easy right currently where we're at. You can see that overnight we did create some overnight demands, as you can see. Looks like we've already hit into this area and this area down below. But like I said, not too crazy about it. They can definitely hold, but just given the overall scenario of things, it's in the middle of this range. Nothing's completely fresh yet. So unless you're in from the lower ends through here, if we pull back, you could have some new supply form as well. Let me just see if I put, where did I put the lower areas? No, not on here. Okay. I guess the gap was where I was looking at down below. But you can see that we do have some overnight demand. I thought I drew them out, though. I just don't have them here. Okay. One more chart I'll check. Could be the other markets I was looking at. All right, let's move on to the NASDAQ. One thing with the NASDAQ, I did forget to show you. So I showed it in the Qs, but I didn't show it to you inside of this area. We did the 240, but I forgot that we've had this from before, where on the day session charts that we had these two levels on top of each other. So the upper level is still there, which is coming in at this 94. 94.84, 95.49. Right now we're holding below at this 94.10 area, as you can see, and with the lower gap coming in at 90.93 to 90.50. So 99.350, 90.50, 90. Again, same scenario here. With the NASDAQ, did form some 30-minute demands down below. You can see this first one already hit as well. And we have this lower one too. And then our upper 240. That's going to be above those zones, those two on top of each other as we start to move up a little bit higher. So the more significant one coming in at 95.52 to 96.84. Okay. You can see on the 15-minute, we do have this overnight that's between the gap, right? So we have this level that was created that strong move out. We barely can touch back into it, but it is an overnight. So the only thing I would say about the overnight is sometimes prices, you can try to move down closer to this lower area, but this is the January where prices did rally out from, that is between the gap. So that zone is coming in at 92.28 to 92.11. For the Russell, so the Russell continues to just miss. So remember, this is a brown area, not at a completely fresh place. The fresh place is still higher up on the 60, but this zone is where it's basically going to be the gap right here. But this gap you can see is coming in from two kind of rally-based drops before it starts to move down. So this one is into a brown. And then down below, so that's that 1355, 1363. Down below, you do have two overnight zones before the gap fill down below. The first one's coming in at 1290 to 1282, and the second one's coming in at 1277 to 1269. Our gap down below, as you can see right here, is coming in at 1246 and 1234. And I did go and check these on the Globex sessions to make sure that they didn't go through it before we went up. So making sure that those gaps are still pretty decent. Let me just see the above area above this high. And you can see once we get into some fresher zones, that's going to take us up into the 1467 up to the 1505, where you have an overnight with a fresher zone up on top. For the Dow, you can see that gap is coming in closer to the 23,468 to the 23,369. It has really filled that gap from yesterday. The overnight zone that we had in the S&P did not hit on the Dow, but you can see it did come in and fill that gap yesterday. Above current price, now we're going to take it up into another gap that has actually these two gaps inside of it, which is going to be coming in at this 25,919 to 26,234. So you can see with today what we have. We have the Nikkei that's already pushed up to its daily, which it has been the stronger market since. If you think about things, how it moved around, things started there, moved around the world. Now they're the first ones to kind of start to recover first, and then starting to come back all around. So as things start to travel around the world. So that's the first one that's kind of coming up to that area. The DAX is lagging behind that. And, ours depending on different stocks, how prices are moving. So technology, obviously, still the stronger market. And then the Dow is and the small caps a little bit of a lagger. Let me just go and see if I had anything. Oh, wrong. Yep, I think we're okay. I think we're good on the Dow. Same thing as the other markets, these 30 minutes, they all created them overnight on the push up so far. And we're still holding above the first one at the current moment. Let's move into the bonds. So the bonds, remember what we've been saying with it, have been very tight within this top of the range and bottom of the range. But then we did create this 240 zone right now, which is closer to that top of the range. But we also had a 30-minute area. It was in brown because of that being in between the overall range and in the middle of the overall range. So it did have to go test up into the higher part of the zone. But then you can see now we have fallen, and now we're actually testing this area. So this is what makes today slightly difficult, because what's going on is we are reacting in these markets off of in these inverses off of our supply, but they right now have demand that hasn't been broken yet. So meaning, we have these areas here, and equity markets can still push a little bit higher given this scenario because the bonds can move very slow. But if we want to see a more significant move, you can see we will start to need to break this area and then continue to move down a little bit further. So you can see right now, this is created on the move up. This is your first little bit of opposing. And now if we need to see a greater move in these markets, we start to need to break down and then try to go for that 4-hour demand again. For the U.S., never made it back to its higher 240 zone, but we did have an overnight zone that turned into actually it's a zone that, it was an overnight zone that turned into a tested zone now. And we did fall back into the also the previous 60. So you can see this area just touched. And then once it came back, it was able to rally out again. We are holding below a little bit of supply right now. And we have a little bit more. So same thing, same scenario. We had a little bit of a 15-minute supply here, and now meeting up into a little bit of opposing demand. So one thing I will say, though, is it does look like it has some, even though it is in brown, so it is in the middle of the area, but it does look like it has some supply above. So that's still giving me a belief that a pullback in equities is still going to be a buy. Okay, so right now this first area is going to be this 179.20 to 179.28, and the second is going to be that 180.13 to 180.21. Okay, let's move into crude. Okay. Yeah, I didn't think that this was going to make it to our session because it was so early. 6, yeah. All right. So what I was looking at was we had a market that, well, if you take a look at crude, it's been bottled up for a little bit. Continued. Let me just see here. right? You can see that it was bottled up for quite a bit inside of here, and then you can see that it looks like it's attempting to break to the upside after holding these lows here, and does have a gap open up above. So I was looking for was a little bit of demand. So this one was a little bit of an overnight, but now we've gone up pretty high now, and we are now testing the overnight high. So we're inside this overnight high, yesterday's high. Let's take a look where it is on. So this is giving us a little bit of a gap. I believe also we looked at where, let me just see where that area is, where the little bit of a tested zone is. I think I had it on the 60 or the 30. I think it was probably 30. Yeah. So as we start to come up a little bit higher, like I said, so these areas are overnights and retested. So it'll be one of those areas once I start to see them start to come in. I'll see if they create a little bit of supplies as it starts to come into these three upper zones. That's going to be before the gap. So now that'll be the next thing to look for here. And then, of course, our 60 zones is going to be as we continue to move up and through the gap. And then that's going to be up into our upper 60 zones, which you can see that's still quite a bit away. But crude oil, you never know. It moves pretty quickly, can get there quickly as well. If that is to happen, then we will have you can see if we do start to break up above quite a bit, we will have another gap going to be in play right down in here. So for right now, we have the 30-minute demand zones plus our 180-minute. All right, let's go and take a look at gold. If you remember, it was kind of in between. So nothing too great in gold, very, very much like the other markets, very bottled up also, where we had these two zones on top of each other, and it's falling right in between the two zones. So we had these two 10-minute zones, did create a little bit of demand on the way up. So prices did hang in there for a little while, but now did push down a little bit further. But in terms of what it's giving us, not a whole lot. Gold in general, holds up because usually when we do have some stimulus coming into play, they still tend to hold up pretty nicely, with the strength in gold and weakness in dollar. So in terms of telling us too much going forward at this moment, it's not telling us a whole lot, except that people are still willing to put into gold with the overall stimulus coming in. All right, let's move into the dollar. All right, the dollar. So you can see that the dollar, right? So this is what I was looking for originally, and the dollar is the one that's actually given us a little bit more. So you can see the dollar, we had a previous demand zone. We had a move up into the new supply that was formed, and you can see that prices now have continued to move down. So the dollar, there has been more talk around the globe about negative interest rates. It's not something that most of the Fed people want, but it looks like a lot of the world is starting to consider it, and given what needs to be done to recover from this overall pandemic. So now you can see we have started to move down, which is going to bring our currencies up a little bit higher. The next area of significance, if we really take a look at it, now there is going to be a gap. I would imagine you get a little reaction off of the gap that's coming in a little bit lower. But you can see really where we're going to have the next area is going to be this lower area here. Okay. So with that, let's go and take a look at the euro. So we never got back down into our 15-minute area, so I would still keep that in play. Right now, you can see, it looks like it's aggressively holding, but remember, we saw that 4-hour supply zone inside of the dollar, and so now you can see we're holding actually up against this 4-hour demand zone inside of the euro. So it's not just reacting off of nothing. It's definitely come into an area. And that's what some people say, well, how do you continue to get in? Well, if you have a newly formed demand, you have a newly formed supply, that's how you continue to get in. But also you have to make sure after a big rally in price that you're not at an area where it is a fresh overall supply. So we are not at a fresh overall supply. Up a little bit higher, you can see that even this area here, not a quite full, when I take a look at the euro, which is interesting, when you really take a look at the euro all the way back up, it does look like a lot of it has been at least tested once. You take a look at this supply, this supply, this supply, this supply, this supply. I mean, more than likely, it's not going to, even if it shoots all the way back up, it's not going to be in one straight motion. But what I am seeing that if it wants to go back up, these are not, fresh supplies as we continue to move off of the lows. For the Aussie, so if you remember, we were looking at same exact thing happened. We have the close 240 that prices is still holding at as it starts to eat away at our closer 240 zone. And then we have our upper, the fresh ones really coming up higher. At the 68.37, 68.05, as well as the as well as back up at the retested zone. So the retested zone would be one I would do more of a little bit more wait and see type of thing. The fresher ones will be one that you could take more as it just comes in. Down below on the 15-minute, we have one area that's inside of the brown box, which is inside of this range. But because we are moving up, we could still look at it, which is 65.49 to 65.42. And the 64.74, 64.67. Okay. So into the pound. So the pound, we're saying that a lot of the supply zones did get tested already, and now we're starting to move up. We did hit one from previous where we've had a 5-minute area. I think I forgot to show it yesterday, but we had it previously. So it did held for a little bit of a day trade, but you can see now we're pushing back up. We still have the lower 5 minutes that's still sitting there in the 121.54, 121.46. I probably wouldn't be more significant to look at it. Possibly back up into this 124 area. But when we take a look at the 4-hour, it's went pretty deep into the 4-hour before. So I would imagine the higher probability is going to be into your higher zones up all the way up into the 130s. For the yen, a couple of you were looking at the either the 4-hour or the 30-minute. It did give you a move out, but met with some supply, but then did give you another chance to try to get in. So you can see this was a previous zone. The dollar yen did not get back to the same area. Dollar yen for some reason is not in terms of level wise not reacting the same way. So you can see here that how we just touched this back into this area again, pretty close to this 30-minute zone. We did have initially some supply up here, but you can see it gave you another entry. And now we continue to push a little bit higher, even though the stock market is pushing higher because the dollar is moving down. I would imagine we're going to lose a little if the stock market continues to move higher and the dollar continues to move lower. I would imagine the yen is actually going to lose a little bit of volatility just because you're going to have two forces fighting it, right? You're going to have the dollar weakness giving the yen strength, but then you're going to have the stock market strength giving the yen weakness. I would believe that the yen is still going to probably win out if the dollar continues to lose strength. It's still going to win out, but the volatility should drop because of that scenario, if that's the scenario we're having. So it depends on what's going to happen with the stock market coming into today with the overall bonds and all. But we do have a 5-minute zone down below that's coming in at the 92.73 to 92.70. All right. So I did see a couple of questions, but tomorrow we'll look at the Canadian dollar. We'll talk a little bit more about the screener a little bit, as you can see. And then, yeah, that's it. All right. So great to see you all today, and we will see you all tomorrow.